Hey everyone, it's Stu here again. Welcome to the proptrade.com. Excuse me. Tonight, today, this evening, wherever you are in the world, this morning, this afternoon, wherever you are, we're going to be looking at how to build a profitable trading routine is the title of this little presentation. It's going to be short of an hour, hopefully. I've got a lot less slides than I had last night. I'm going to just finish off with some of the slides we missed last night. So if you were here last night, I'll go through those last final slides. It's all about prospect theory, which if you've never heard of prospect theory, it's fascinating and all about psychology, which is what we were talking about last night. Routine, all successful traders, whether they're scalpers, whether they're swing traders, whether they're, long-term investors, whether they're trend followers, whether they're mean reverting traders, whether they're using EA, whether they trade manually, whether they trade Forex, but whatever, everyone needs a routine if you're going to stay in business in this business. Okay. So it's, boring stuff, but it's your regimented stuff. The best traders are those with the best routine, a routine that works for them as ever. And as ever, it works with their edge. So that's the most important thing. We got about 20 slides this afternoon. So let's see how we all get on. Hope you're well. Hope you've had a good day. It's been, I'm still up in northern England. I can still see the sea. It's blue sky out there at the moment. We got caught in a really big shower this morning. We had a fantastic dog walk earlier this morning at 7 o'clock, but then it absolutely tipped it down the middle of the morning. So anyway, hope you're well. Hope you've been following what I've been doing as well on our Discord group. We've had we were short across the board. I was really worried last night against the dollar, but they've come in quite nicely. And the final pair that didn't trigger last night is triggering tonight, the Aussie dollar against the US dollar. Those dollar trades, 6 of them all in the money, are very, very much hit targets. Some of them very, very close to target. So anyway, more on that later on or tomorrow when we update stuff for the trading log. So how to build a trading routine with yours truly. Stuart, I've been around a while. I've worked in the City of London. I worked for a big bank. I worked for an even bigger bank. I then moved the family, lock, stock and barrel, to Cyprus. Long story, but I'll explain it one day if I ever meet any of you face to face. I have met and explained in many seminars what that was all about. I did all sorts of different things when I first went to Cyprus. I was a teacher for a little while. I sold some property. I came away from what I was doing in London. But I ended up back at a broker, and I stayed there for best part of 10 years, and I was at another broker for a couple of years as well. So and now I'm back in London for personal reasons. So there we go. That's me in a nutshell. The last 30 years of my life has been involved in this marketplace. Well, all of my life, all my working life's been involved in this marketplace. So I mean, trading and investing for the best part of over 30 years now. My approach has always been the same thing. Do what's probable, keep it simple, and understand the time frame that you're trading, and know about yourself. That's the first big lesson I learned. It took a while because we're all, quite stubborn human beings. Discipline, patience, learning from your mistakes, accepting that you're wrong, accepting that you've got to lose a lot in this business. All of that took a while before the penny dropped, but when it did, it made things a lot easier. And I now trade things that I understand, only understand. I'm a trend following trader. I tend to post most of my risk is on an end of day basis, so the noise of the day I'm not that bothered about, to be honest. But I also enjoy the short-term scalping trading as well. And we'll do some live trading sessions. A lot of you have been asking about that, so we'll do some of those in the weeks ahead as well over this quieter July, August time frame as we come into the summer recess. And to remember, all things will really kick off again come the 1st of September when Labor Day is over in the United States and things get back to normal as far as volumes and market participants. But do what's probable, keep it simple. It's all in the numbers. So let's crack on. We will talk about routine, why it's important, what routine works for me. Again, this is what works for me. It doesn't necessarily work for you, but if you take something from this, all well and good. If not, I'm sorry, but this is what works for me. You know, I talk about risk management a lot. I talk about yourself. I talk about you know, scheduling yourself, you know, before, during, after, all that sort of stuff, and then assessment, analysis about how you've done, what's gone wrong, what's gone well. Simple, you know, repeat the good things, get rid of the bad things, and, you know, keep the process, keep the edge, find your edge, and, you know, you will move forward. Trust me, you know, you keep doing that, you are doing more than, sorry, excuse me, you're doing more than 95% of traders. 95% of traders haven't got a routine. 95% of traders lose money. I don't know why they've lost money. They're you know, they're throwing it, whether they're constantly buying new accounts, or investing in different brokers, thinking it's the broker that's wrong, or the indicator, the latest hot topic, whether it's VWAP or whether it's, you know, ICT, whatever it is, you know, it works for many people. All these new attitude, all these new approaches to trading, you know, find what works, stick with it, and run with it, and you know, you'll be a happy bunny. Absolutely, no question about that. But most people don't spend the time in investing in themselves. So routine, what is it? You know, what is routine? You know, it's one of those words we hear all the time. And why is it important to traders? Well, the dictionary tells us that routine, a situation, action, or event which seems completely ordinary. An action, situation, or event which seems completely ordinary, rather than the other stuff, rather than the stuff that's driving the internet, that's driving TikTok, that's driving, you know, all these viral videos. Something that's interesting, exciting, or different. Like that couple that got caught at the Coldplay concert, you know, that's interesting, exciting, or different for the whole world to see. And there they were, caught literally with their pants down or their arms around each other. You know, a sad situation for their partners and their wives, and the lady's partner. But anyway, routine, you know, use routine to describe activities that are done as a normal part of a job or process. That wasn't a normal routine, was it? What were they thinking of? You know, illicit affairs, very naughty, very bad. You know, routine, keep the stuff in a box, you know, keep what you're doing right, you know, and, you know, the benefits will flow. So what is the routine of profitable traders? Well, they have routines. As I say, I have a different routine to the next guy, and vice versa, but you know, if it works, let's not knock it. So as I said yesterday, I said many times, you know, this business is a mindset business, and part of that is doing the stuff, the soft skills, the stuff of patience, of discipline, following rules, accepting that you're wrong. It's not, you know, it's not the exciting stuff like we just saw on that first slide. You know, technical analysis is great, fundamental analysis is great. Having a system, whether it's a trend following system, a mean reverting type approach, you know, different brokers can help you. Spreads are quite important if you know, you're looking for just a few pips, so get the right broker. Certainly have a guru, have somebody you follow, or have a team of traders. Do it in a gang or a group. But you know, the problem with that is how do you accept the losing? How do you accept the winning? How do you share the profits? All of that old props need putting down together. But if you're just a group of guys or a group of girls looking to, you know, do as a hobby, all well and good, but you know, hobbies don't make money. You know, you don't do a hobby to make money. This is a serious business, you know. So, but again, you've got to get your mindset right. Are you doing it as a business? Are you doing it as a hobby? Work it out. How are you going to do it? Are you going to use robots? Are you going to do it manually? Up to you. What platform you're going to use? Are you going to follow news calendar? All of that stuff. It's all fantastic. It's all important. But unless you got your head right, unless you know yourself, all of it goes out the window. And similarly, you know, you have a great routine, but if your routine means you're trying to do something that doesn't fit with your psychology and your human build as a being, then you know, you're often fighting against it. So regardless of your style, you know, whatever you're trading, the time frame you're trading, as I said, whether you're a scalper or whether you're a mean reverter, whether you're swing trader, you know, traders thrive on routine because it's the principles. That's why those people that do, you know, risky jobs have routine. You know, doctors, nurses, they're dealing with life and death literally on a day-to-day basis, part of their job. So they have a significant routine about how they give the drugs out, how they administer the drugs, how they treat patients, how they examine patients. The people in security services, when they're in the army, the navy, police force, they all have routine. They check in, all the things they do on a daily basis. So the boring, repetitive nature of routine is what makes it so powerful. Okay, let me just say that again. The boring and what seems like repetitive nature of routine is what makes it so powerful, because it's a process that you're doing. It's like, when you go to the gym, it's learning to do the correct type of exercise. And muscle memory, learning, how to walk, how to run, how to jump and swim, and all those sort of things we learn as human beings as we grow. Learning to drive a car, learning to drive a motorbike, your bicycle. Repetition works. Same with with your exams, with looking at trading platforms, trading charts, all that sort of thing. Repetition does work. Quite boring, quite tedious. Obviously now we've got the power of computing. Power of computing is changing x-fold on a daily basis. The chips that these hardware, these very hot chip makers are producing, and it's beyond it's beyond when I started in the banking business in the late 80s. This is just beyond the computing power of anything we could have imagined back then. And that, in another 10, 20 years, it's going to be beyond where we can imagine now. So, but having a routine, helps you build all these things. Great programmers have routine. So everybody that's, made anything about themselves would have had a routine. We go back to the Ford factory. Henry Ford invented well, not invented, but created and made profitable the linear program of making automobiles, pulling in, assembling parts from all over the countries it was back then. But Henry Ford, failure is simply the opportunity to begin again, this time more intelligently. So try again. Get that process correct, get that production line correct, and Bob's your uncle, and everybody's copied him ever since. I mean, everything is now produced in a the thing that he came up with, this production line in factories, just in time manufacturing, which the Japanese after the Second World War took it to the next level. Obviously, that's now been taken to the next level by places like Japan and Vietnam and Korea, and obviously other parts of the world as well. But the routine of process can't be overstated, and the success of process and routine can't be overstated. So it is as a trader. That's how you've got to approach each and every trading session, each and every trading day, or a trading week or trading month. Break it down into its fundamental parts. So routine is boring. It requires all the soft skills we've talked about in all of the webinars we've done together. Structure, patience, discipline, getting rid of ego, accepting losing, accepting winning as in the same mindset as accepting losing. You don't get too down when you're losing. You don't get too excited when you're winning. And continuous learning, continuing improving, tweaking things on every now and again. The only constant is change, as somebody once said to me many years ago. And that's even more fundamental today than it was when my old boss said that to me back in 1984 when I just graduated. So, onward and upward. And if you can't cope with all of these things, structure, discipline, patience, you're in the wrong business. Go and do something else. Don't waste your money. But if you've got the ability to be able to structure yourself, to work on your patience, work on your discipline, honestly, the ceiling, there isn't a ceiling. The world really is your oyster, and time and money will bring its own reward. So but you've got to work on it, and not take it for granted, and not get too flippant when it's going well, and not get too despondent when it's going wrong. Find out why it went well. Find out why it went wrong. What is it? It's usually you, my friend. It's not your broker. It's not your platform. It's not your internet connection. Sometimes there's a little bit of all of those things. It's not Donald Trump suddenly saying something that was a bit of a surprise that moved the market. All of that is yes, but most of the time, it's what you're doing as a trader, as a human. So work on it, my friends. Okay. I've got some just screenshots here, but golden rules for new traders. I found this a long time ago. I just brought it up for today. You've heard me say all of this many times, and these are some of the rules and all of the rules, some and all of the rules I've used over my trading career. So it really is personalizing everything. It's all right writing all this down, but you've got to exercise it. You've got to execute it. It's all right, listening to me dribble on for 20 minutes or half an hour, but has it added any benefit to you as a trader? If not, what's the point? So understand everything that you're doing. So again, you see risk management, 2% rule, trades, probabilities, terminology, methodology, fixture, all the stuff you see me say before. And routine is fits into what trading is. So again, this is another screenshot I just found, but I would perhaps tweak some of these numbers, but you get the point. It's not about the skill of a trader. It's not actually pressing buy and sell. That's really easy these days. You don't have to ring up a broker and wait for him to give you a price and agree the price, put the phone down, he then sends you a telex or a fax to confirm it before it's done. It's all done instantly now, isn't it? Crypto trading, 24 hours a day, 365 days a year, wherever you are in the world. The market, the electronic market is open. It never closes. But just be aware of, when you're trading on a Saturday or Sunday afternoon, you're not trading against the real market. You're not trading against the majority of people, because the majority of the market, the institutions, are not there. So just be well aware of what's going on. So emotional control, mental control, preparation. That's what we're talking about today. Preparation, routine. 10% of it's skill. That's how we break it down. I mean, tell me if I'm wrong. Tell me if you think differently. This is all old hat and it doesn't work anymore. You let me know. So what you need is an edge, my friends. Whatever it is, whether it's the market, your style, your strategy, and your routine is part of that. If you haven't got a routine, or if you can't stick to routine, you hate routine because it is boring and repetitive, and it's not part of your setup. Well, you're probably not cut out to be a successful trader. That might be, and probably is, why you're losing if you're watching this as a losing trader. You've got a gambler's mindset. Most gamblers don't have an edge, don't have a routine. The market sucks them in. The risk of the game sucks them in. Don't understand themselves. They can't accept losing. They get carried away when they're winning, and they think they're the top of the world, and just keep going and blow it. So 3 key phases. Obviously, there's the preparation before you actually place any risk on the market. Remember, you are a risk manager first and foremost as a trader. You're managing your capital, your hard-earned capital. You've got to manage it. So before you put any risk out there, before you put any skin in the game, you've got to have a process, a routine. This is what I do on a daily basis most of the time. I wake up, I'll pick my phone up, straight onto my free Reuters feed. What's happened overnight? What's the main economic news overnight? Has there been an economic release from Japan or Australia or Hong Kong? Has there been a political announcement? Something's happened in South Korea, something's happened in Taiwan, while I've been fast asleep. Check the news and what's coming up for the day. I normally already know what's coming up for the day because I'll have planned that over the weekend. But if you haven't got a calendar, there's lots and lots of economic calendars. The one from investing.com you find on our website here. And again, you can tailor it just to fit your particular assets. So, and again, you can obviously change that. So default has all these other countries on. With all due respect, I'm not really interested in some of the news that comes out for instance, Russia. To be honest, it doesn't particularly affect my trading platform. Spain, I would take off this. Singapore, with all due respect to you, my friends, and I'd take it off. I'd take South Africa off as well, though I'm interested in what's going on in South Africa, but not from a trading point. Same with South Korea. So I'd change that. I would filter it so that way around. I would also, or I tend to look at just the high impact events. I'm interested in all of this type of information, so I'll check all of that. I'll select all of that. But really, the big events are the ones that are important to me. The 2 bulls and the 3 bulls. Actually, let's start with the 3 bulls, because these are the ones. Remember, guys, if you've got a standard account with us, when we say news trading isn't allowed, these are the big events where we're talking about. We talk about a freeze on taking new positions around major news announcements. So 2 minutes before and 2 minutes after. Remember, this is GMT time down here. So 2 minutes before, so 12:28 on this particular event on Tuesday, up to 12:32. You wouldn't be allowed with a standard account with us. You wouldn't be allowed to take new positions around this this speech from Chair Powell today. He didn't actually say anything that actually moved the market. He didn't mention really economy. He didn't mention interest rates or anything, to be honest. Today was a bit of a non-event, to be honest. But tomorrow, 2 o'clock Universal Standard Time, GMT, we've got existing home sales. We've got the very, very important for oil traders, commodity traders, the official oil inventories out of the United States tomorrow, 14:30 GMT. So, these are the major events that potentially move in the market each and every week. So you should be aware of these all the time. Secondly, the next tier down, the medium impact, the 2 bulls here on in the investing.com's calendar. So we apply that. Obviously, there's more of those, less market moving potentially this week. So you can see there's quite a relative number of those. Some minutes from the RBA. Bailey's speech was deemed a 2 bull rather than a 3 bull on investing.com. Some of them would have had them as a 3 bull. Michelle Bowman, she's important because she's in the frame potentially. She's the only woman that's really in the frame for the potential next Fed position. She's speaking as we speak now, actually today, isn't she? As is President Lagarde. You'd have thought President Lagarde would have had a 3 bulls, but not according to investing.com. Chair Powell did, but the president of the ECB, she only gets a 2 bull. But you see the point, okay? But with these 2 bull ones, guys, they're not. You can trade these news events with your standard account. Obviously, get a pro account, and you can trade the news at any time as well if you want to trade that way. But anyway, understand. Obviously, my point is, understand what's going on is what I'm saying here, and that's part of the routine. So part of what you do should be checking news, checking the economic calendar. What's happened in the previous session? So again, my trading day, my business day is based around the London's time. So I'm interested in obviously what's happened overnight. I normally know where US markets have closed. Obviously, I'm fast asleep during most of the Asian session. But what happened in the last session of the US is the most important one, really. So typically, if the US markets have closed positive, the dollar's closed up in the US, it takes a lot in Asia for the dollar to slip. If stock markets have closed positive in the United States, it takes a lot for stock markets not to move up a wee bit, at least in the opening morning session in Australia and Japan and China and other markets. But obviously their own particular market dynamics have an impact on that, like we had with the Japanese elections on Sunday, the political fallout we've seen in South Korea over the first half of this year. Obviously all the nuances that come with each and individual country that we see on the economic calendar. So what's happened in the previous session, paying particular attention to the US session. Where are we? We're nearly half past. Okay. So scan your setups, or if you've done your setups before the night before, which is what I do, check what's going on. Have a watch list of potential or possible probable trades is what we want to be looking at, and this, how many or how few, that's down to you. That's down to your strategy, your system. But, you want to see where's my potential entries, where are my potential exits, where's my stop loss, where's my target level, where do I want to get in, where do I want to get out, put some alerts on your system and your strategy. Again, it's just individual trade. If you want to do, you might want to do this once a week, or for a daily charts, you might want to do it, once a session for 15-minute charts or 5-minute sessions. You might not want to do it at all. You just might want to have a paper list or a list in your head about what's doing up. But prepare, and this is a process we need to go through as successful traders. In the live session, once well, I'm going to trade for these next 2 hours, don't get distracted. Execute your trades that you've planned to take, unless something significantly different happens, and then make a note of that. We'll come back to writing that down in a minute. But whatever approach you have, make sure you always plan and stick to your risk and money management plans, like we've talked about before in other sessions. If you don't have a money management or risk management approach, you will end up blowing your account, period. If you don't trade with a stop loss, in more important than a take profit, to be honest, you will end up blowing your account. I'm fairly comfortable saying that. Write everything down. If you can do it as it happens, obviously all well and good. Obviously, if you're scalping, if you're trading very quickly, you're doing lots of trades, that's going to be much more difficult. But if you're waiting and you're just trading on the hourly candles or the 4-hour candles, do it in real time. You get a bit more down. I always use a page a day calendar, typically diary. Typically, I've got a small one here at the moment, and you're writing stuff down as it happens, as the news comes out. What was the expected number for this? How was it better? Was it worse? What was the reaction to the market? What was the comments from the market participants? Real-time journaling is a bit messy, as you can see. Scribble here in my book, but it really helps, because I've got not hundreds is an exaggeration. I've got every year, I've got, this is a calendar, a diary. So every year I've been trading, I've got 30 of these, and they make fascinating reading for me, not necessarily for everybody else. But you will find some real gems in there. You'll see, strategies, approaches, days where some days are better than other days. You might find sessions are better than other sessions. It'll all come down if you're writing stuff down as well. And obviously during the session, whether you're in and out all day just looking at 4-hour candles, or you're sat trading 10 minutes candles or 2-minute candles for an hour or two, don't get carried away. Only execute the trades that fit your plan. Don't overtrade. It's stuff we talked about yesterday. We talk about it all the time. It's a characteristic of failing traders. They do too many trades too quickly. They try to do catch-up trades, or get back even trades. They don't work. Don't get too tired. Don't overstay your session time. And then afterwards, the post-trading window, if you like, make sure you have written everything down, everything was logged, and analyze everything. Again, I know it's boring, I know it's tedious, but there's lots of software that can do all of this for you now, especially the numbers side of things. How many winning trades, how many pips did you make, how many points did you make, how much percentage did you make, all of that now. There's some fantastic automated trading journals. But again, I'm a bit old-fashioned because I'm a bit long in the tooth. And for me, again, writing stuff down with a pen, this is a horrible, cheap Bic biro, but it works for me. Writing it down, it has you're using a different part of the brain when your eye is watching what you're writing. A little bit different to when you're typing, you're watching your screen and typing, but it's the same thing. But write it down. That's all I'm trying to say. Analyze your performance. It can be painful at some times, but again, you can get carried away when you're having a good run. But what happened? How did you react? Write it down. Review the charts, review the setup, and also what didn't happen. You might have, like last night. Last night is a great example. I was very surprised. My strategy went long. All 6 major dollar crosses, and it was like, whoa, massive exposure, very significant risk. to the dollar, and it's worked out today. It may not have. It may. I'll be sat here thinking, "Ooh, dear me," but I know my system well enough over the years to know that I just do as I do as it says, basically, because that's part of my routine. That's part of my structure. You know, computer says buy, I'll buy. You know, it's that sort of thing, because I know it works in the long run. Doesn't, you know, that particular trade might not work out, but then, you know, over 7, 8, 9, 10 trades, I know ultimately I'm in the money. So I just do as it says. I'll do as it says, and that's the sort of stuff I've written down over the years. And if you do this on a regular basis, it becomes less of a hassle, and you become quite excited about doing it, or quite, you know, you get a kick out of doing it, and you see the correlation of it, and then you start tweaking things. Then you can start taking things to the next level. Then you become less and less worried about losing one individual trade or 3 or 4 individual trades, because you know over time you're going to get there, and you do get there. Okay. Also, you know, that's at the end of the session, but also at the end of the week, when the market, the important here, the point here is that big red word there, close. When the markets are closed, there's nothing tweaking about. You haven't got the distraction or the ability to distract yourself to actually go to a live market to see what's happening. There's no flickering of buying and selling. There's no flickering changing of price. You know, so when the markets are closed, you know, review, document, analyze, take a next step of where you're going to go next, with your strategies, with your approach, with your system. All of this is a profitable trading routine. It works for me. It works for everybody I know. Different approaches, but everybody does this in a different way. But everybody does it, you know, before, during, after. You know, some spend very little time on it, very little effort on it, because it's become second nature, and that's where you want to. It's like, as I said before, it's like learning to ride a bicycle, or like learning to drive a car. When you first get into a car or first jump on a bicycle, you haven't got a clue what's going on, have you? You're wobbling about. What's this thing here, this gear stick? Or even if you're driving an automatic car, you know, what are these 3 pedals, these 2 pedals down here? Which one do you press? You know, steering wheel looks pretty intuitive, doesn't it? But, you know, when you first do it, it's all very, very scary until, you know, you've done it a few times. You have a routine. You know, you get in, close the door, put the key in the motor, check your mirror, check the steering wheel, check the gear stick. You know, that's the routine, and that's why, you know, routine works. Whatever you're doing, you know. So whatever routine you have, this is what it will build ultimately. You know, your routine, aim, you know, for consistency, because consistency builds confidence. As I've said, review everything. More important than charts or economic analysis or understanding the news or understanding what fundamental announcements mean. You know, why the yen's gone this way, or why the treasury market is what it is. You know, understand as much as you can, but concentrate on what you know. So review everything. Master one asset, one time frame that fits with you. So, you know, if you're going to trade, you've decided, you know, gold is for me. I'm going to trade the 5-minute time frame, you know, because it fits with me. Or I'm going to trade on an end of day basis because it fits with my lifestyle. I can do other things during the day. I can come in and check this at 8 o'clock at night. I can only, you know, I only want to trade 2 days a week. You know, Thursdays and Fridays fit with me. You know, Tuesdays and Thursdays fit with me. You know, look at what's going on. Find your routine. Get your trading to fit around your lifestyle, not your lifestyle around your trading, because otherwise, you know, that doesn't work either. Check your stats. All these soft skills, this stuff we talked about all the time: patience, discipline, emotional control, and find things that work for you. You got to master that key coin we talked about yesterday, and we talk about all the time: the fear and the greed of having risk on in the market. We remember we are risk managers. We are managing our risk. So when we lose, we know we're going to lose. We accept we're going to lose. It's going to happen. It's part and parcel of our business. It's inevitable. So how do we minimize that fear and that worry and that stress? Well, when we lose, We lose a little bit. We lose our 1 or 2%. We don't lose big. We just accept that's part and parcel of our trading business, and we move on. We move on. So fear and greed, we manage. The impatience, the indiscipline, we keep our emotions in check. We can't get rid of them, and don't believe there's a way of doing that, guys. Dark Pips, hello. I just wish I'd talk to you and share something with you. Certainly, it could mean a lot to me, sir, if I had a word with you. Dark Pips, shout away, my friend. Shout away. If you don't want to share it publicly, I understand. Stick it on. I don't know if you're wherever you are. If you're Dark Pips on Discord, send me a friend request. We'll speak that way if you want. But my friend, I don't know what it is. I don't know whether you got a routine or what it is, but certainly, sorry, 34. I think I've just seen this. Sorry, I missed that a few minutes ago. But yeah, I mean, if you want to share it here, feel free. If you don't, I understand, my friend. But thank you for sharing. So where was I? Yeah, so it's that it's you. As I said yesterday, as I say all the time, it's you. You've got to find that thing. Remember the thing about the mirror. It's really important. I didn't realize that. I knew it was coming up. I didn't realize the next slide, but this business is a mindset business, my friends. As I said last night, as I said all the time, so get yourself a mirror. How do I manage risk? Look yourself in the eye. Look yourself in the mirror. How do I manage risk? How do I cope with risk? How do I cope with being profitable as well? Have I got a routine? Is my routine working? Or have I got a routine? If I haven't got a routine, you're probably not working. How do I take my trades? Have I got a strategy? Where do I get out when I'm in a trade? Do I get out too soon? Do I get out too quickly when it's winning? Most people do that. Do I get out too? Do I stay in a trade too long and let the loss get too big? Most people do that as well. That's why most people lose at this business. So you've got to understand yourself first and foremost. Look in the mirror. That's your competition. It's not your broker. It's not your guru. It's not your EA. It's you. That's who you're beating. It's your mind. That's who you're beating, your subconscious mind. And the few slides that I missed last night are going to sort of hopefully emphasize that. So one final thought. I said it was going to be a bit shorter tonight. One final thought about routine from the marvelous Kahneman and Tversky from 1979. 1979. Where were you in 1979, my friends? I was just finishing just before I'd done my A levels. That's a long time ago now. But they did this research, this psychological research on psychology, and as I've said here, trading psychology, risk management, routine are everything when it comes to trading. And prospect theory, first proposed by Kahneman and Tversky in the late 70s. They actually formulated it in 79. The numbers on this actual these two questions I'm going to ask you in a minute are much smaller back in 1979. I've changed these for just to bring it a little bit up to date. But it's all about risk and reward, certainty and chance, gain and loss. Okay, it's very, again, like most of these great things, the simplicity of it is fascinating. Okay, so what do you prefer, Dark Pips and anybody else who's still watching, to answer A or B to question one? What do you prefer? A, a certain, i.e. guaranteed gain of 100%, a definite gain of $50,000. Would you prefer that, or B? Or would you answer B to question one? 80% chance. So that's an 80% chance. That's 8 out of 10 chances of winning $75,000. So a 50% gain of what you're guaranteed if you answer A, or but also on top of that is a 20% chance of nothing. So 80-20 of gaining $75,000 or a guaranteed gain of $50,000. And would you answer A or would you answer B? Again, write this down. You stick it in the questions if you want to, but would you answer A or B for question one? I'll just leave that there in case some of you are going to answer that. Question two, same question, or similar question. Do you prefer A or B? B again, A or B to this question? a certain 100% chance of a loss of $50,000, so guaranteed loss, 50,000, or B, an 80% chance of losing even more, $75,000 this time, but there's a 20% chance of not losing anything if you answer question B. Okay. Dark Bits, I'll just come to your. I'll come to your question in a minute. Okay, we'll answer it. Don't worry. Yeah, just still playing. Right. Okay, I'll answer your question in a minute. Let me just finish these slides and I'll come to you, my friend. Don't worry. So A or B for question 2. Okay. Here's the answers. You know, in the original experiment, most people chose for question 1, they chose the guaranteed 50,000, and for question 2, B. So for question 1, which was a guaranteed, a certain win of 50,000, most people answered A, most of the sample size, and these were a range of, I mean, there were students, most of them, but there was a range of a range of ages as well. For for A, for question 1, they chose A, and for question 2, they chose B, which was the risk of losing nothing. Okay, so there was a potential of losing even more than a definite loss of 50,000, and a big chance of that, in fact, of 75 of losing even more, 50% more than your 50,000 loss, 75,000. But there was a 20% chance, a 1 in a 2 in 10, or 1 in 5 chance of actually not losing anything. So most people went for B when it came to losing. You know, however, as the guys formulated with their theory, this prospect theory, both choices, in fact, are irrational, as they choose the smaller expected gain, i.e. 50,000 rather than 70,000, or the greater expected loss, $75,000 or against $50,000. But why? Why is that? It's because it's human nature, the quirk of human nature regarding risk and gain. We are risk averse when it comes to gains, i.e. we try to hang on to our gains. We don't want to add to our gains, but we're risk takers when it comes to avoiding loss. So we'll take that risk thinking, oh, we might minimize our loss. So we'll take a risk there, but we won't risk it when we've made money. You know, it's a bit odd, isn't it? Because as traders, you know, it explains why traders let their losses run and they cut their profits. They get a bit twitchy when they're making money, but they're happy to gamble with their losses. Just leave them open, let them run. And that's the exact opposite, really, of what you should be doing. You should be cutting your losses and letting your profits run, not the other way around. That's why trading is such a mind game, such a mindset, and it's these soft skills that we've talked about over the last 2 nights. This trading psychology, the skill of discipline and having a routine, an edge that works for you, and understanding yourself and understanding the mindset, which makes trading such a fascinating thing for me as well. And once you get that, once you let that sink in, you know, it takes a lot of the stress, a lot of the anxiety away from trading. It just becomes a process, and that's what successful traders do. They have a process and they repeat it day in, day out, week in, week out, month in, month out, and that's all it is. You know, it becomes a bit boring, and that's what it should be, you know. And the Lamborghinis and the Rolex watches and the big houses and the holidays and the time, that all comes from this boring, simple step-by-step process, letting your account get bigger and bigger and bigger, reinvesting your profits, reinvesting your dividends, and you know, it can be done. Okay, so it's understanding those bits that really make the difference. It's not as I say, it's not the gurus, it's not the trading robots, it's not the latest AI robot. It's understanding yourself first and foremost, and that really is what it's all about. So Dark Pips, you're saying here some questions you have here. Let me have a look what you're saying here. You're saying here, I I have an edge. Profit of 1, risk management is in check. Past 2, 10k props in my own. Received payouts 3 or 4 times, but currently I'm confused. Blown accounts. Now I'm back testing. The edge is profitable. I'm still blowing, man. I don't know. Unless I look at your particular account, my friend, what's gone wrong? I don't know. But that sounds like something. Yeah, that shouldn't have gone. Something's unhinged somewhere or gone wrong somewhere. But if you're trading with us, we'll certainly have a look at it. But if all those boxes are ticked, Dark Pips, I'm not sure what the situation is. Obviously, I don't know your particular setup, but anyway, let's analyze. Let's have a look and let's analyze later or tomorrow or something. But we'll have a look at that for you as well. If you're talking about our particular firm, but something that's not working. The thing about back testing as well, my friend. Remember, back testing isn't necessarily on live markets with live feeds as well. So don't, when you back test stuff, you're going to be easily 20% worse in the real market, in the real cash market, a real live account. Typically at least 20% under performance compared to what you might be doing when you back test something. Okay. But yeah, I'm happy to look into that for you or look further for you. But if you've got an edge, as you say, your risk, you understand what risk management is. You got through two. You're saying here you got through 2 accounts. Is it scaling up? It's gone wrong, or you've been paid as well? What's gone wrong the next time? I don't know. Have you changed? Something changed, or is it different setup, different approach? If not, something's. You might have just got lucky a few times. I don't know. I mean, that happens as well. If not, yeah, we'd certainly look into it for you. Absolutely. Okay. So thanks for those, my friends. Yeah. Any other questions? Let me know. Stick it in the box, my friends. My 3 favorite trading books. People ask me these books over the years. These are very old now, but Reminiscence of a Stock Operator, the story of by Edward Lever, story of Jesse Livermore, written in 1923 originally. So it's over 100 years old. Still very, very relevant. If you haven't read it, do read it. I've read it 3 or 4 times. I always said to myself I'd read it every trading year. I've not done that. Of the 3, really, this is the one that really helped me and changed things massively for me. Trading in the Zone by Mark Douglas. Again, that's written in 2000. It's 20 odd years old now. Yeah. And the Market Wizard series of books by Jack Schwager. I think there's 7, 8, or maybe 9 now. Jack Schwager, a futures trader himself, but a great interview and getting people to open up. Some of the back in the 80s when he first started this, some of them were very secretive, very reluctant to explain what they were doing. But he managed to get that document there, and there's a whole host of very famous people now from the back of the Schwager Market Wizard series, and I'd say so. His last one was only a few years ago, so brought it bang up to date. The New Market Wizards was his last one approach. 2 recent books I really thoroughly recommend. Tom Hugard's Best Loser Wins, and Steve Goldstein's The Mental Game of Trading. Steve's been around a long time. Tom's been around a long time as well. Both of them were based in London. Oh, Steve's still in London. Tom was based in London. Worked for City Index for many years. Danish guy, now back in Denmark. High risk, not high risk, high stake day trader. Adding to winning trades. That's Tom's big mantra. But it's also all about managing your losses, managing your understanding yourself, and that's very much Steve's mantra as well from the Mental Game of Trading. He runs the Alpha Trader and Art of Currency Trading. Sorry, what am I talking about? He runs Alpha Mind podcast, some really, really great interviews on there as well from Steve and his colleague Tom, a really good guy. You'll see him all over the internet as well. Both of these characters, very, very Highly recommend it when it comes to me. So the proptrade.com is us. If you haven't got an account with us, it's very, very simple to open an account. The evaluation products, one step or two step, one phase, two phase. This is what we talked about before about the standard account doesn't have standard challenge here. It doesn't have news trading. So you need your pro account if you want to go to trade news. You can see the rules down here. It's all very, very simple. So no news trading is not allowed if you went to the pro account. So that's $10,000 account is $85. If you're new, we're offering a discount of 25% for new traders or new traders to the proptrade.com. So that brings that $85 down to $63. If you wanted a pro account, so you can actually trade the news if that's so way inclined, news trading allowed as the pro account, the $10,000, it's $71 with a 25% discount. Okay, obviously the numbers, the targets, the profit targets, the loss targets are a little bit different for different types of accounts. One step, the express account, again, news trading allowed on the express account starts from $55 or $40 if you're new to us, but it's not a massive account, but our friend Dark Pips was $10,000 account from $60. Okay, so we will see you all again. Actually, I'm not going to be here tomorrow. I'm traveling tomorrow, so I'll see you again on Thursday for the ECB rate announcement and Ms. Lagarde's press conference after that. But my hour is up nearly, so I'm going to leave you in peace here. Tuesday, the 22nd of July. Take care, everyone. Be good, be safe. Dark Pips, yes. If you open a ticket on Discord, my friend, getting the support guys will get hold of you. Okay. You open a ticket on Discord, and we'll speak there. Okay. All the guys will speak there and let me know what's going on. Okay. But thanks for your input, Dark Pips. Everyone else, take care. Have a great evening. And we are theproptrade.com. Thank you for your time, and hope to see you again sometime. Take care. Be good and stay safe.